So good morning, everyone, and welcome to our Brodie's LBTT Green Freeports Relief seminar. I hope everyone's well today. This is quite a topical seminar, which we're very pleased to bring to you. We're really going to look at two things today. First of all, we're going to talk through what is a green freeport, where will they be, how will they operate, and secondly, we'll talk about the conditions of the Green Freeports Relief. My name is Bob Langridge. I am a partner in the corporate tax team at Brodie's, and we will be joined in a minute by Isobel de Inverness, who's a director in the corporate tax team as well. Isobel is having a small IT issue, which is why she's not on screen talking at the moment. So first of all, what is a green freeport? Well, you'll remember a few years ago, the Conservative government under then Chancellor Rishi Sunak introduced the concept of freeports for England and Wales. And Scotland, after some discussion under then Finance Minister Kate Forbes, decided that we would adopt freeports in Scotland, but we would be using green freeports instead. There will be two green freeports in Scotland, and these are large zoned areas, about 45 kilometres in area each. They will include rail terminals, seaports, airports, or a combination of these. And within each freeport, there will be designated areas that will have a package of tax, customs, and other incentives available to businesses operating in those areas. Now, there are several policy objectives underpinning the green freeports. These are slightly different to those in England and Wales because of the green aspect. They are to promote regeneration and job creation. That is a lead objective across the UK. In Scotland, they're also to promote decarbonisation and transition to net zero economy. They are to establish hubs for trade and investment and to foster an environment of innovation. We just move on to the next slide. In England, there are going to be a total of 8 freeports. 7 of these will be sea freeports, and 1 is centred around an airport. Within each of these, there are designated tax sites. These are smaller than the freeports themselves, and these were designated by statutory instrument in 2021 and 2022. 5 of the English freeports were fully approved by 2023, and these are eligible for a variety of tax reliefs now. I'll hand over to Isobel, who's now joined us, who will continue talking us through the background to the green freeports.
Thanks a lot, Bob. So it's actually very exciting to have freeports in Scotland on our doorsteps, and the whole thing is relatively complicated. So we wanted to try and give you a kind of overview as to what's going on before looking at the LBTT relief itself, because it's obviously just part of a big picture. So there's going to be 2 green freeports in Scotland, and the bidding for them started in March 2022. We were expecting announcements of the winning bids in June, but actually that didn't happen until January 2023. Which means that the whole timetable has been pushed back a bit, but it's actually more complicated in Scotland because we're dealing with both the UK government and the Scottish government, because some of the reliefs and so on are UK government reliefs and some are Scottish. Anyway, the winners were the Cromarty Firth Green Freeport and the Forth Green Freeport. I think the Cromarty one started off being called Inverness and Cromarty, but seems to be being called Cromarty now. But if we just go on to the next slide, we'll see a picture of, or a diagram anyway, of the Forth Freeport and the sort of larger area of it, because the Green Freeport overarching area, or, the big zone, is actually quite large. Within the Freeport, within the Green Freeport area, there are, as Bob mentioned, tax sites and custom sites. On this slide, you can see the tax sites are green blobs at Grangemouth, Rosyth and Leith. the customs sites are purple blobs, and they're at Burnt Island and Edinburgh Airport. And if we move on to the next slide, this is an overview of the Cromarty. That's sort of green line that's snaking about is the outer boundary of it. So you can see it's really quite large. But within that big area, again, there are 3 tax sites, which we'll come on to in more detail, and several customs sites. So if we look at Cromarty first, and that's by no means saying that, you know, it's difficult to do this without appearing to favour one over the other by talking about one of them first. But anyway, one of the points about freeports is that they compete with each other. So not just in Scotland, but throughout the UK, I think the idea is that there will be all these freeports and they will compete with each other. So Cromarty, who's involved in the bid? Well, there's a website, www.greenfreeport.scot for Cromarty, and it explains that it was a partnership of organisations exploring the opportunity for Cromarty Firth to become a national strategic renewable energy hub. So there's a pipeline of renewable energy projects, wind farms off the north and east coasts. It's going to be a centre of excellence for floating wind technology, expanding the use of short sea shipping from the port of Inverness, which is a sort of short sea shipping is a really environmentally friendly way of moving things around. There was a wide range of public and private sector bodies involved in the bid. And if we move on to the next slide, we'll see some of them. And you'll be getting a copy of the slides, as I think has been mentioned. So, you know, you can look at this at your leisure. But if we move on to the next slide after that, you can see even more people involved in putting this bid together. So moving on to Forth, here what's being said is that it's a catalyst for new green technologies, alternative fuels and renewable energy manufacturing, accelerating the nation's, i.e. the Scottish nation's, just transition to net zero. And this whole green flavour runs through the Scottish Green Freeports. And it's not just greenwashing at all, because there is such a focus on doing green things. But as well as the green technologies, major upgrades to infrastructure and technology-backed skills development programs for young people, and being a catalyst for the reindustrialization of Scotland. So it all sounds really quite exciting. If we move on to who was involved in the Forth bid, I apologise to the Forth bid for having their logos not in colour, which makes them look less exciting than Cromarty. But as you can see, there are a lot of good people involved. And on the next slide, more you can see it was a big team effort. So what's going on now? The bids have been accepted. Oh, sorry, that's the third slide. What's happening now? The bids have been, the bids from Cromarty and Forth have been accepted, and it's moved on to the next stage where the councils are moving forward with outline business cases and final business cases, which are being discussed with the UK and Scottish governments. And it's Falkirk Council for the Forth one and Highland Council for Cromarty. We're expecting the tax sites to be designated this autumn, and they'll be designated by the UK government. But the Green Freeports won't become fully approved and operational until the non-domestic rates relief and details of how the customs aspects will operate have been agreed through these business plans. But as we've mentioned, the idea is it'll be broadly the same offering. So moving on to the next one, the wider zoned area is a radius of 45k, and within each one, 3 tax sites and a number of custom sites. And the tax sites get LBTT exemptions, enhanced capital allowances and NIC's relief, and an exemption from non-domestic rates, which we'll come on to in more details. As well as that, there's the custom sites themselves with duty deferral, import VAT suspension and all of that. A lot of grant funding from both governments and retention of business rates by the councils. So moving on to the next slide, why are they green? We've mentioned that there's this big focus on decarbonisation, and Grangemouth apparently produces 13% of Scotland's carbon emissions. So the green agenda is very key here. But also for the Scottish ones, there's a discussion ongoing about the non-domestic rates relief and how that will work. In the English Freeports, you get 100% rates relief on new build and a partial relief if you're expanding. But in Scotland, query whether that's going to apply to all types of industry, or whether some of them will just be get a lower rate if it's, you know, non-green energy, for example, or whether they might be banned altogether. So there is a green agenda, as we've mentioned, in the tax sites, but not in the overall green freeport zone. So in the smaller tax sites, there's LBTT relief, enhanced capital allowances, NICs. The precise location of the tax sites is not yet known. It's still under discussion, but as we said, it's expected to be agreed and designated later this year. There's actually more information about the proposed tax sites in the Cromarty bid, and if we move on, we'll see that there are 3 tax sites in the next slide: Invergordon, Nigham, Pitt, Calzine and Inverness. And moving on further, there's a slide of the Invergordon tax site. Those green bits are the tax sites, some of which appears to be in the sea, but there's no doubt a good explanation for that. And on the next slide is the Nigham, Pitt, Calzine one. And on the next slide after that is the Inverness tax site. So as I say, these are what was proposed in the bid. So it's not yet been finally agreed. There will obviously be people who know what's going on in the discussions, but it's not in the public domain exactly where they'll be. So if people are buying land and stuff, they don't yet know exactly where the tax sites will be. For Forth, there's 3 tax sites: Grangemouth, Rosyth and Leith, but we don't know where exactly they are. They're just blobs on a map at the moment, as you can see from the next slide. So it's just those blobs that we mentioned earlier. On the customs side of things, this is all quite exciting, but it's not the subject of today's talk. It's all about being able to bring goods into the UK and export them again without paying duty, and import VAT being suspended, and the ability to have factories or entities being set up to carry out repair work, for example, importing all the parts and then re-exporting the repaired vehicles or whatever it is. So in terms of the customs sites, the Cromarty one has, if we move on to the next slide, has 5 proposed customs sites. And again, these are all still under discussion because all the customs stuff is UK legislation, customs duty and VAT. But those are the customs sites. I don't actually have a detailed map of where they are, but on the outline map, which is in the next slide, you can, that if you could see the writing a bit bigger, you would see that they're all kind of marked on that slide. For the Forth, moving on to the next slide, the 2 custom sites are at Burnt Island and Edinburgh Airport. And again, as we've mentioned, they're just blobs on a map at the minute. So the rates relief, we've mentioned that for the English, moving on to the next slide, for the English freeports, there's 100% relief on new build and partial relief for expanded properties, but rates are devolved to the Scottish government. So the rules here are different, can be different. We are having green freeports, so will we have full relief from non-domestic rates for everybody? Still, that's still under discussion. Will Cromarty be the same as Forth? We don't know whether there's, it sounds as though they should be the same, but they will be different from the English ones. And this will require changes to legislation, and there'll need to be consultation. So this is a bit from the future, but at the moment you can't assume that if you buy land in the Freeport that you're going to actually get 100% non-domestic rates relief, because it may depend on who you are, or well, not who you are, but what kind of activity you're going to be carrying on and so on. I'm going to hand back to Bob now to talk about the LBTT relief, which is obviously the main focus of the webinar today. Bob.
Apologies, I was on mute there. Thank you very much, Isobel. Firstly, just a point of order, Burnt Island isn't just a blob on a map, it is actually my home. Secondly, onto the Green Freeports relief. The LBTT relief, at first glance, is quite straightforward. However, there are a few interesting quirks to it, which I think it is worth running through. The legislation is currently in draft in the form of an SSI, which has been laid before the Scottish Parliament. So the terms of the relief may change a little before it is given assent. The basic outline of the relief is that there will be an LBTT relief for the purchase or lease of qualifying land within a tax site. And that's important. It's only within the defined tax sites and not within the Green Freeport area. And there are two kinds of relief available. There is a full, i.e. 100% relief, if 90% or more of the consideration being paid for a purchase is for qualifying land. And if less than 90% of the consideration is for qualifying land, then your apportionment is to be on a just and reasonable, then you'll get a partial relief. The way you have to apportion consideration is the sort of standard way for LBTT purposes, and that is that it has to be an apportionment on a just and reasonable basis. I would just say about just and reasonable basis that while it is not defined in the legislation itself, I think the concept of reasonableness has been explored in quite a number of tax cases. It's an objective concept, and the basic idea is that there's no one single reasonable answer to a question. You have to look at the approach a taxpayer takes to an apportionment and ask yourself, is this an approach a reasonable person would have taken? If it is, you have a reasonable apportionment. Just, in my view, means that it has to be justified by reference to some other factors. And certainly we have got experience in negotiating with Revenue Scotland various different methodologies for apportionment in the past. The concept of qualifying land we'll talk about in a minute, but the key point here is that it doesn't just mean land within a tax site, it's a little tighter than that. You have to intend to use the land for qualifying purpose as well. So really there are two circumstances, I think, where you can wind up in a partial relief situation. Number one is where you are buying land that is partly in and partly outside of a freeport, of a tax site in a Green Freeport. And number two is where your parcel of land is wholly within the tax site, but you are not intending to use the entire parcel for a qualifying purpose. Now, an interesting point about the draft SSI as it currently stands is that technically the LBTT relief is not going to be available until the tax sites have been formally designated by the UK government by way of secondary legislation. And any purchases or leases carried out before that designation date within a tax site won't be able to qualify for the relief. However, the draft SSI states that the relief will be switched on from the 1st October 2023, and there's no reference within the SSI of the designation date. So it's unclear exactly how that is going to work in practice. If designation happens before, will they bring forward the date? Or if designation happens after, will people be able to claim sort of on a retrospective basis? I suspect the answer to that is not, but that is a point I would argue needs to be tidied up in the draft legislation as it stands. Next slide. The Scottish Government put out a consultation on the terms of the relief for about 2 months earlier this year, and the responses were published last week at the same time as the draft SSI was laid. Now, under the affirmative procedure that is being followed here, the SSI has to sit before Parliament for 40 days. And as I mentioned, the intention is for that relief to be switched on the 1st of October, although how that will interact with the designation process remains to be seen. Here is the main title of the SSI itself, the Land and Buildings Transaction Tax Green Freeports Relief Scotland Order 2023. Next slide. So as you can see, there's quite a parliamentary process that has to be gone through during this 40-day minimum period. The Delegated Powers and Law Reform Committee will need to consider the terms of the SSI, and the Finance and Public Administration Committee will be the lead committee. That committee may take evidence on the terms of the SSI, and it has 40 days to publish a report for the Parliament. If the FPAC approves in its report the terms of the SSI, then the Parliament will vote on the terms of it, and because it's an affirmative procedure, it has to be approved by Parliament before it can be signed into law. In terms of how the relief will operate, as Isobel mentioned, it is intended to be very similar to the SDLT relief, which is available for freeports in England, and some of the drafting is kind of very clearly taken from the SDLT relief. But the idea is that the statutory framework and the framework of tax relief available across the UK is broadly similar, so that the competition between freeports depends on the decisions actually made by the bodies running those freeports and not differentials in the tax treatment, etc. Should also say that Revenue Scotland will be preparing guidance on the relief. So to the extent we have some unanswered questions, and you will see a couple of those coming up as I go through the reliefs, we would expect or hope that those are covered off in the guidance in due course. So there will be further clarity coming. The basic idea, as I mentioned, of the relief is that, assuming it does start on the 1st of October, that the purchase or lease of land in a green freeport tax site to be used for a qualifying purpose can qualify for the relief. It is a relief and not an exemption. So in order to get the relief, you need to submit an LBTT return. The sort of standard rules about when an LBTT return is required will apply, and the relief has to be claimed in that return. Like most reliefs, there is I always think of it as a probationary period. The legislation calls it a control period here, and that is a 3-year period in which the land has to be used for an intended qualifying purpose. And if the use of the land changes during that 3-year period, then the relief will be withdrawn. The other important point about the relief, and I'll come back to this later on, is that it is a time-limited relief. It is intended to apply for 5 years only. So in order to fall within the relief, a transaction has to happen between 1st October 2023 and 30th of September 2028. Where will this sit in the LBTT Act? It will sit in a new Schedule 16D, and the main terms of the relief will be set out in that schedule. One of the most important concepts in here is this concept that we talked about of qualifying uses or qualifying land, what the legislation calls qualifying green freeport land. And as I mentioned earlier, there are 2 components to that. It has to be in a tax site, and also the buyer has to intend to use it for a qualifying purpose. Next slide. The qualifying purposes are that the land is to be used in a commercial trade or profession, or that it is for development or redevelopment for resale, or that it is for use in a property letting business with the exclusion of residential letting, but also certain other excluded letting activities, which are drawn from the corporation tax concept of a property letting business. Here is the full list of the excluded rents. You'll see, given the green aspect of freeports, the first 3 of these are perfectly sensible. electricity line way leaves, pipelines for gas and oil. Any rents from these don't qualify. Rents from a mobile phone mast don't qualify. And I find this one slightly interesting. Rent in respect of the siting of a wind turbine doesn't qualify either. We were discussing this the other day, and we decided that should you, for whatever unlikely reason, set up a wind turbine in a tax site, if you hold the lease, you probably get relief on that for operating the turbine. But if you are renting that to the turbine operator, you don't qualify for the relief. So that's quite an odd situation, considering it is a green freeport, but nevertheless. The legislation also sets out a variety of things that are not qualifying purposes. And my reading of the legislation is that we have to apply a bit of caution when we're looking at these, because some of the points about this qualifying purpose are maybe slightly different to how we would think about things normally for LBTT. First of all, it is the buyer's intended qualifying purpose. Normally, when we are analysing out a piece of land for LBTT, we look at what the seller has done with the land, and that is the most important thing. How is it used as the effective date? Here it is how the buyer is going to use it. So the first comment I would make is, it seems to me from the legislation that the purchase of residential land, provided you are intending to use it for a qualifying purpose, e.g. if you're buying a block of flats, if you're intending to demolish that and build something else, that probably is a qualifying purpose. However, if you're intending to buy, to use the land as a dwelling, develop that land for residential property, rent it to someone who will use it as residential property, or, and this is an important one for developers, hold that land as stock for resale without developing or redeveloping it, like you might do in a forward funding transaction, then you won't qualify for the relief. Before we move on to the next slide, where we talk about residential property, I would just want to say quickly, one thing I think to be careful of here is around the 6+ rule. So normally, when we say you've got 6 or more dwellings on a piece of land, that is non-residential. And that's a sort of shorthand people are used to. I don't think that helps us here. In other words, if you were to build a block of 10 flats on a piece of Green Freeport land, that would not be for a qualifying purpose. And the reason for that is that the 6+ rule is quite constrained. It doesn't say the land is non-residential where you have 6 or more dwellings on it. What it says is where you acquire 6 or more dwellings as a result of a single transaction, that transaction is to be treated as non-residential. So it's about how you treat a transaction, not the underlying nature of the land itself. Just a reminder, though, that the concept of residential and non-residential property for LBTT is quite broad. Here we have a snip of about half of the wording of section 59 of the LBTT Act, which defines residential property. As you can see, the main bit of the definition in subsection 1, something suitable for use as a dwelling or being converted to a dwelling, but also I would just bring people's attentions to subsection 3 as well. These are things that are deemed to be dwellings, even if they aren't. Residential accommodation for pupils, students, members of the armed forces, and residential institutions that aren't within subsection 4. And then subsection 4 has more kind of institutional types of home in there that are excluded as qualifying from dwellings treatment. If we go on to the next slide, please. Another thing to note here is you can have relief for bits of what it calls ancillary land. So if you are buying a piece of land in a tax site and it is ancillary to another bit of land that you have, which you are going to use for a qualifying purpose, then you can get the relief on that ancillary land. But while there are three kinds of qualifying purpose, ancillary land can only qualify if the qualifying purpose is that the land is to be developed or redeveloped. So that is quite restricted. Ancillary land, just for where the main site is going to be used in the purposes of a trade, for example, is not going to qualify. Obviously, a property letting business, as we've alluded to, is included as well. Next slide. An important thing to note, though, is that with these qualifying purposes, where you've got a business, they have to be carried on a commercial basis and with a view to profit. And there is quite a bit of HMRC guidance about what this concept means in their business income manual. And I've given you the references here. But I think it's worth just noticing what HMRC actually say about this, because they have quite a distinct concept of commerciality and profit motive here. Commerciality doesn't mean you are doing something to generate a profit. Here they say, we take it to mean conducted in the way that we would expect a business of the same type to be carried on. So in other words, it's not enough that you're carrying on a business with a view to make money. You have to be carrying it on in the way that businesses of that type are usually carried on, or in a manner which is explicable for that kind of business you are doing. And if you fall outside that sort of range of behaviors, then you might not be carrying on your business on a commercial basis. So it's always a question of that.
We've actually got
But
quite an interesting, sorry, Bob, an interesting question that's been asked, which is, would the activities of a SCIO registered as a company dealing with promotion of Scottish artists, selling Scottish art, etc., qualify as commercial or professional activities for the purposes of the LBTT exemption? That's quite a fast ball to be answering, but I just wondered if you and the person asking it said, apologies that this is a silly question. It's not a silly question, it's a very interesting and difficult question, but I don't.
I recognize the name of the person asking that question, who frequently asks very good and interesting questions at our webinars. I think, like I say, you might be able to argue it here. I mean, certainly the commercial basis point, depending on how the business is carried on, you might be able to argue that. With a view to profit, you might have a bit of a sticky wicket there, because if you look at what HMRC say about a view to profit, they say there are two possible ways to displace a trader's assertion of expectations of profit. Either they don't have a reasonable expectation of making a profit, or there is another reason for carrying on the trade. So depending on how the activities are carried on, it might be open to argue, well, actually the reason this SCIO for doing what it does is not to generate a profit. Be that as it may, I might not, if I was acting for this SCIO, solely focus on the Green Freeports relief. I would also be considering, could it qualify for charities relief? And I would think that is probably a more fruitful avenue to pursue. Anyway, on to leases. This is where our 5-year point comes back in. Green Freeport relief is available on the grant of a lease. The normal conditions apply, but if you've seen some of our webinars about leases before, you'll know that for leases where you qualify for certain reliefs from LBTT, the assignation of that lease to a new tenant, where that new tenant does not qualify for the relief, is treated not as a normal assignation, but as a grant of a lease from the outgoing tenant to the incoming tenant. And that means that the incoming tenant becomes taxable on all the rents for the remainder of the lease, which is normally quite a lot more expensive than the amount they would pay just on a normal assignation, which would be limited to the premium plus any changes to the rentals that happen after the assignation date. they'll have a deemed new lease, they'll be within the 3-year returns, etc. There are two ways that this could happen, really. Number one is if you assign a lease to someone who does not intend to use the land for a qualifying purpose. It'll be treated as the grant of a lease to them. But number two, and perhaps more importantly, and maybe even surprisingly, is any leases granted within a green freeport that are assigned on or after the 1st of October 2028 will not qualify for the relief because it's time limited. So they will automatically be treated as the grant of a new lease. And therefore, those rents will become taxable. So I think there is a bit of a bear trap there that either ought to be fixed in the legislation or that people need to be aware of when transacting with these leases in the future, that pretty much any green freeport lease that you assign after October 2028, after September 2028, is going to be the grant of a new lease, which is quite a surprising thing. Next slide.
Yes. Sorry, I was just going to say on the assignation of leases, you wonder whether that's kind of a bit unfair, or is it really just designed so that this 5-year period is carried over into leases? Because it does seem a bit of a strange one to penalise people for, well, I suppose they're not being penalised, but they're being treated in a particular way that's not very helpful, just because it happens to be after the 5-year period. So it doesn't seem very fair.
Correct. No, it doesn't seem very fair. The other thing, of course, to say about green freeport leases is if you have a lease which qualifies for the relief, just like a group relief lease or anything like that, while the relief applies, it will be outside of the scope of the further returns rules. So a tenant under a lease qualifying for the Green Freeports Relief won't have to do 3 yearly returns, etc. Because at least where it's a full relief, that qualifies as an exemption. Where it's a partial relief, you still will have to do those returns. And again, that gives rise to an interesting unfairness, or at least an interesting point. The withdrawal of relief and on assignation doesn't distinguish between full and partial relief. So you could wind up with some rents being double taxed, which does seem an unfair result.
Now, we've had an interesting question, which is about the fact that LBTT relief is not yet available and the tax sites haven't been designated and we don't know exactly where they are. So what's going on to maximize the benefits? Are people entering into contracts which are conditional upon tax relief being granted? And I think the answer to that is that yes, they are. And Bob, I know you've been looking at one recently where they were making it conditional on the tax relief being available.
That's correct. I mean, you would think that with the Cromarty tax sites, given that the boundaries of those have been proposed, that people might be a bit more relaxed, or people might be more keen to contract for an investment into those areas. Whereas with the Firth of Forth tax sites, because they're not just blobs on a map, but they don't have defined boundaries yet. It's not entirely clear, even if you're contracting for a piece of land, whether it will qualify. But yes, the main thing we are seeing is people either putting in offers that are conditional on the relief being available, or agreeing to take such steps as may be required to ensure that the relief is available. Another approach that could be taken is, of course, having a metric to adjust the price if the relief isn't available.
Because we're seeing clients who are landowners in these areas, or think they might be landowners in the tax sites in the Forth, for example. Well, not in the Forth River, but in the Forth Green Freeport. entering into option agreements, you know, optioning the land. And again, it's a question for the purchasers of trying to have wording which either says, you know, we'll, if it turns out not to be in a tax site, then we'll work together to improve the position as best we can, or as Bob says, some sort of adjustment to the price. But hopefully, I mean, it's not a very long delay till we find out what the exact areas are, but it does mean that at the moment we're in a bit of an interregnum where I fear that there might be a bit of misunderstanding amongst some sort of parties, that they can already get the relief and it's a slam dunk, whereas it's not quite yet. It's still a bit uncertain. And the same with the rates relief. It's not a slam dunk yet. We don't know precisely how the rates relief is going to work. But
we've got a couple more minutes, and another question that's come up is what are the other tax relief available in the tax sites? And these will be the kind of UK-wide ones. I can summarize these kind of quickly. There will be a capital allowances, an enhanced capital allowances regime. So plant and machinery expenditure incurred in a tax site within the qualifying time period. I think that would have to be until 2028 for the Scottish sites, although it's up until 2026 for the English ones. Expenditure on plant and machinery will qualify for 100% capital allowances when it's incurred, provided it is on new plant and machinery. That is a bit better than the current full expensing regime, because some assets under full expensing will only get 50% upfront capital allowances, whereas all plant and machinery in a Freeport should get 100%. It's also a bit better than the annual investment allowance, because that's capped at 1 million a year, whereas Freeport expenditure isn't. There is also an enhanced structures and buildings allowance, so a capital allowance on the fabric of your building. Normally that is 2%. Within a Green Freeport tax site, it would be 10% per year instead. There's also, very, very quickly, a national insurance relief available to employers who meet various conditions. For example, employees have to be new hires, spending 60% of their time in tax sites, etc. And the basic idea of that is normally an employer pays 13.8% employer's national insurance on salaries. And in a Freeport, the threshold at which an employer will pay that 13.8% is, for most sort of normal employees, that is raised up to £25,000 a year salary. So for employees earning £25,000 or less, there would be no employer's national insurance. And that's per employee, it's not in the aggregate. I think that takes us to time.
Yeah. There's just a very interesting comment which I'm going to share, even though we're over time, which says that saying the Forth Green Freeport tax sites will not change much. We're just finelining the current GIS maps. I think for most of us, we haven't seen any detail at all apart from those blobs on the map. So I don't know if there's anything that can be put into the public domain that would give people more of an idea of where they are. If they could, that would be very helpful. But anyway, granted that we've run out of time, thanks very much indeed for coming along. If you have any further questions, please email us, and let's all go forth and make the best use of these Green Freeport opportunities in our country. Thanks very much.